I'm Dominic Chu with your ETF Edge. New data is finding some retail investors have been diving deeper into increasingly complex ETF strategies to gain a trading advantage amid the market volatility. Meanwhile, institutional investors have been sticking with or even reverting back to more simplistic strategies. So which end of the spectrum is more likely to be the winner in the end, and what will happen to the relative losers? Joining me now is Mike Akins, the founding partner of ETF Action, the firm behind some of those findings. Take us through what exactly you're seeing thematically behind these institutional investors tilting back towards more simplistic strategies, while retail investors like all of us may be gravitating towards more complex ones.
Yeah, thanks for having me, Dominic. If you look at the 13F data, the institutional data sets that come out quarterly, you can see a clear trend with the users of ETFs being predominantly in the core categories, being driven by large investment advisors, broker-dealers who are allocating on their clients' behalf, versus more of the niche areas of the market. So a good example, take silver in the last quarter. You can see a significant amount of that is being driven by retail flow. So just in general, if you kind of look across the marketplace, 60% of all ETFs is owned by institutions. But the one caveat being there is you got to watch for the trading institutions like Jane Street. For example, Jane Street acquired 20 million shares of SLV last quarter, which is a significant amount, and that cannot be tied into long-term allocations of the investment advisor.
Hey, Mike, take us through some of the examples of the ETFs, but besides SLV, that we are seeing some of these retail investors gravitate more towards these actively managed, more perhaps niche or exotic type strategies.
Well, the obvious example is anything single stock related. So whether it be covered calls on single stocks like the yield max strategies, or all the leverage inverse, almost all of those ETFs have sub 10%, in most cases sub 5% institutional ownership. So it's 100% being driven by retail in those more niche areas. It also plays through, though, more to the thematic space in general. So the more niche thematic trends, while there is good evidence of investment advisors adopting some of those AI plays and things of that nature, it is still by a wide margin being driven by retail.
All right. We're going to continue this conversation over at etfedge.cnbc.com. Mike's going to be joined by Aga Kuplinska, the Senior Vice President of Product Development over at Tidal Financial Group, a big platform for ETF development and, of course, distribution. Scott, I'll send things back over to you guys.